Hello everyone, this is Jimmy Singh. Welcome to my channel Real Estate Edge with Jimmy Singh. In today's video, I like to discuss what will be the impact of Federal Reserve rate cut. They did quarter basis point today. How will Canada react? Because typically Canada follows US Federal Reserve most of the time. So they did quarter point. So we'll probably do another rate cut 11th of December. Whether we do quarter basis point or 50 basis point, only time will tell, because mostly Governor of Bank of Canada, he decide after reviewing the data, unemployment, other metrics which impact economy. So Trump won yesterday, day before yesterday. So what it means for North America? First, my thoughts are, his policies are pro-growth. Tax cuts will definitely supercharge the US economy, and we will see the growth spill in North America because we trade with US, and I'm sure we will benefit in certain things. I will come out with other concerns which most economists have. So rate cuts, folks, typically balloons debt, meaning more government bonds hitting the market, which could depress bond prices and raises the bond yield and fixed mortgages. So if you're sitting in Canada, I'm sure in last 2 days, you have seen that since the bond prices have gone up, so does the fixed mortgage rates. So I got some notifications, some mortgage brokers in last 2 days that some lenders are increasing fixed mortgages 5 to 10 basis point. And in my previous video, I mentioned if you want to play safe game, I think variable is the way to go, because moving forward up till next summer, Bank of Canada will keep cutting rates, and if you have a variable mortgage, you will benefit a lot. And then once by maybe third quarter, fourth quarter, they stop cutting the rates, and then you can compare whether you lock fixed rate at low fours or maybe 3.89 or 3.99. So always watch my previous videos. I share my thoughts on those as well. And another thing is, these proposal put forward by Donald Trump of growth and tax cuts, they will likely benefit our Canadians bank which have exposure to US. So there are some banks, BMO has exposure, TD, Scotia has exposure, CIBC is in US as well, RBC. They acquired a couple of US banks. So I think they will benefit for all these tax cuts in US. At the same time, I think the biggest risk lot of economists perceive is tariff. Because in last elections, Trump was saying that he's going to put 10% tariff on all the goods that are coming to US. And they are, putting more tariffs on Canadian steel. And same thing, if you are in a housing industry, we need steel to build houses. So I think cost of housing will keep going up. I don't see how we can manage to produce many homes, since these days the market is kind of very quiet in pre-construction. If you go to Toronto, Vancouver, those high-rising sales, they are like last 20-30 year lows. So we have to find other solutions how we can make it affordable. Another thing is, Trump is in his speech, he said he will make sure that America will be superpower in oil supply. So he believe in energy. His mantra was drill, baby, drill. So he want to boost oil supply, which actually could benefit Alberta if we bring those Keystone pipeline, which takes the oil from Alberta and send it to US for refining. So I think Alberta will benefit. Their economy depends on oil, and I think their real estate will do better. But at the same time, I see our Canadian dollar is getting weaker, meaning all the cross-border goods that we get from US, we have to now pay more money to buy the same thing. It will drive food cost high, it will drive electronics, farm equipment, whatever comes from US, we will as a Canadian will pay more money to buy the same goods because US dollar is getting stronger, and with Trump's elections, business seem very bullish. And they're actually doing way better economy wise as compared to Canada as well. Another recent report put forward by Urban Nation is that the average rent in Canada is pretty much flat in most provinces and city, and some bigger cities, they are noticing that average rents are falling down. And another thing we have to see is in 2025, 1 million mortgages are up for renewal, and if some home sellers are under stress because they got those mortgages locked at 1.52% and now they will renewing at 4.5 or 5%, they will end up selling. So I have a very strong feeling that next summer we will have more listings. As per the data from our London St.Thomas Association of Realtors, in October, our supply was 4.5 months. Previous in September, our supply was close to 5. So since we are heading to now winter months, December, so it's just the cycle that listings always goes down in December, January, February, because people take their houses off the market because it is a holiday season, Christmas times. And some people whose houses have been listing for a long time, 2, 3, 4 months, they will pretty much cancel the listing and put it back next spring or next summer. So I see a big surge in listings, and obviously the more supply, it will put pressure on prices to go up. And recent data put forward by our board says in October, average price in London St. Thomas area average was 623, and sales to listing ratio was 47.6. That is pure buyer market. Inventory is sitting as 4.5. Another thing I like to share, folks, is sometime in media, I was reading an article yesterday. They said house prices went up in Mississauga last month 10%. And, always take these average sale prices with a, grain of salt. The reason is, let's say in Mississauga, average house is worth $1.2 million. Last month, if they have 7 to 10 big sales, meaning 20 million sale, 10 million sale, those kind of bigger sales, it will skew up the data and people start thinking my house is worth 10% more. That's not how it works. So you always talk to local realtor who can have all the goods and stats. Same, let's say average house right now is sitting at 620. Next month, let's say in London, builders does 20 sales of 1.5 or 2 million. It will make all the prices go up and people start thinking average price is trending up. I'm now sharing certain data to put things in perspective. So this October in 2024, average price was hovering around 623. So if I see last year in October 2023, it was sitting at 629. So it actually has come down from last year. In 2022, the average price was 640. 2021, the average price was 672. So that is the peak market. So we have come down average from 672 all the way down to 623. In 2020, pre-pandemic, our average home in London St. Thomas was 526. In October 2019, average price as per London board MLS system was 412. So as you see, prices are not trending up. They are pretty much flat or declining. And another sold data that our board shared with us last month, the total sales were 661, which have certainly increased from last year when the sales in October 2023 were 488. But if I go back to 2021, the average sales in our board was 865. In 2019 and 18, we have in total 900 plus homes that were sold in October. So yes, historically, if I take 5-7 year average, sales are still down, but good prices, good houses which are priced right, they're still selling quick within 10-15 days. In some situation I see in starter homes, we are seeing multiple offers as well. So guys, it's very critical when you interview any agent, always ask, what are the recent sales and how much I can, get in the market. Interview 1, 2, 3 agents so you get exact data what your house is worth. And seasonality is a big thing. So right now, as I said, we are in November, December, typically lot of houses which are on the market for past couple of months. Sellers typically take them off the market since they want to now celebrate Christmas, and we are heading to winter months, and they will put the same houses back on the market in spring, hoping we will have bunch of rate cuts, which will we have. So it is exciting time for buyers. If you're a buyer, you have a solid job, lot of down payment saved, you want to enter the market, you have lot of good deals out there, folks. So if you are not working with a realtor yet, you want proper counseling, guidance, and not to overpay in this market, give our team of Supermax a call. My number is 647-961-2639, or you can call our office 519-933-2559. Thank you.